For more on the tech sector, we're joined by Jenny Hardy, Portfolio Manager at GP Bullhound. Jenny, very nice to have you with us. Thank you for joining us. Let me ask you then about the tech earnings story. And we talked there about Apple, our colleague talking about the strength there of the Apple iPhone sales. To what extent are we still in a kind of post-pandemic era for tech? And to what extent have we moved on from that? Because for those who sell hardware, you know, a lot of people stocked up on a lot of hardware during the pandemic and then really didn't have any need for more immediately after. How are we on that story?
Yeah, absolutely. I mean, I think broadly, Apple reflects what we've seen across tech in earnings so far, which is that broadly, tech earnings have been fairly resilient this quarter. And as you said, there are clearly still some ongoing inventory issues around still some of that pandemic, even 3 years on. It's quite amazing. But if you take a step back and look beyond the sort of volatility, beyond some of the macro uncertainty, really fundamentally tech is still solving for many of the world's challenges, and that is really still driving demand for technology products and services, which we're really seeing.
Okay, Mark.
Yeah, Jenny, good morning. We had some great earnings so far, but tech was rallying really strongly before the earnings season. It was an incredible March for some of these big tech names. Do you think that was more about the fact that we were seeing long-end yields collapse and therefore we're back in the growth names, these high-duration assets were suddenly good value, basically that inverse trade versus the yields? Or do you think it was a large part to do with the sudden excitement around AI and everything AI and the advantage these big tech names have in that AI revolution?
Yeah, I think a lot of this is really about the fundamental strength of big tech, and I think AI is sort of the next example of tech's capability to drive productivity. And I really think that we're starting to see some of this AI demand really reflected in the fundamental earnings of big tech. I mean, the other thing to say is that big tech has really had this sort of cost-cutting agenda. So Mark Zuckerberg came out at the start of the year and talked about the year of efficiency. And really, that's been adopted by tech more broadly. And they've all shown an excellent ability to cut costs. And tech is really well placed to cut cost. It has typically high gross margins, strong market positions, and so that's also been a significant driver of earnings and will be a significant driver of earnings this year.
I wonder who should get excited about AI. I mean, leaving aside questions of an existential nature, which maybe we don't have time to solve on this programme alone. In terms of businesses and the ones that harness AI, are you more excited about those who deliver AI solutions to the consumer, or is it the chip manufacturers that will power the AI revolution? Where do you focus attention?
Yeah, I think when we think about investing, we really think about business models and we think about competitive barriers to entry. Now, I think that's still quite uncertain in lots of AI. But what we do know, and we heard from all of big tech reporting last week, is that companies are investing. They're investing huge amounts of capex in AI infrastructure. For us, we play that through the semiconductors. So if you look at servers that effectively enable AI applications, either training servers, inference servers, they all require a huge amount of semiconductor content, more GPUs, we own Nvidia, more and faster CPUs, and we own AMD. Both of those companies make their chips at TSMC, which we also own. So those are three companies that will really see fundamental demand as a result of AI this year.
OK, thanks very much, Jenny. Thanks for joining us. Jenny Hardy, Portfolio Manager at GP Bullhound, with thoughts on tech and the earnings stories that we've learned from over the past week.